Imagine you're running a business and every time you want to buy something from your neighbor, you have to pay a guy 3 towns away a massive fee just to use his permission. Then one day that guy gets mad at you and tells you that you cannot buy food or gas anymore because he decided to lock your wallet. You would be pretty mad, right? Well, that is exactly how most countries feel about the US dollar right now. For decades, the dollar was the only game in town. If you wanted to trade, you had to use the greenback. But in 2026, the world is staging a massive rebellion. Countries are tired of the USA using its money like a giant stick to bully everyone else. They are starting to realize that they do not actually need the dollar to survive. They are choosing their own local money to settle deals, and it is causing a massive earthquake in the financial world. We are talking about a total shift in power that is happening right under our noses. The era of the dollar being the king of the hill is facing its biggest challenge ever. Hello friends, welcome to Geo Unseen YouTube channel. Today we break down why nations are choosing local currency over the greenback. The dollar has been the world reserve currency since the end of World War II. This gave the USA a massive advantage. They could print money to pay for whatever they wanted, and the rest of the world had to accept it because they needed those dollars to buy oil and grain. This is what people call the exorbitant privilege. But lately that privilege is feeling more like a burden for everyone else. When the US central bank raises interest rates, it makes the dollar stronger, but it crushes the economies of smaller countries. Their local money loses value and suddenly they cannot afford to pay for food or energy. This has pushed nations to a breaking point. They are looking for a way out of this trap. In early 2026, we are seeing a massive explosion in local currency trade. It is not just the big players like China and Russia anymore. We are talking about countries like India and Brazil, and even small nations in Southeast Asia. They are signing deals to trade in their own money. For example, India is buying oil from the UAE and paying in rupees. China is buying gas from Russia and paying in yuan. This might sound like a small change, but it is actually a massive blow to the dollar. Every time two countries trade without using the dollar, they are taking away a piece of its power. The demand for dollars goes down and the influence of the US government shrinks. The biggest reason for this shift is what people call the weaponization of finance. When the USA froze hundreds of billions of dollars belonging to Russia a couple of years ago, it sent a shockwave around the globe. Every other country looked at that and thought, wait a minute, if the USA can do that to a nuclear power like Russia, they can do it to anyone. They realized that their money in US banks was not actually theirs. It was just a digital entry that could be deleted if they did something the USA did not like. This fear has driven countries to start building their own payment systems that do not rely on Western banks. They want to be the masters of their own fate. Quick question for you guys. Do you think a country should be able to lock another nation's bank account as a punishment? Or is that way too much power for one country to have? Let me know what you think in the comments because this is a huge debate right now. Now let us look at how these countries are actually pulling this off. In the old days, it was really hard to trade in local money because you needed a massive system to track everything. But in 2026, the tech has finally caught up. We have to talk about India here because they are absolutely crushing it with their digital payment tech. India has a system called UPI and it is like magic. It allows people to move money instantly with zero fees. Now India is taking this tech global. They are linking their system with countries like Singapore and France and the UAE. This means an Indian trader can sell goods to a guy in Dubai and the money shows up in rupees instantly. No dollars and no Western banks and no waiting. This is making local currency trade so easy that the dollar is starting to look like an old flip phone in a world of smartphones. China is doing something similar but on a much bigger scale. They have created the CIPS system, which is a direct rival to the Western SWIFT network. In early 2026, more than 100 countries are already using this system to move money in yuan. China is telling the world that they do not care about your politics and they just want to do business. This is very attractive to countries that are tired of being told how to run their own house. We are seeing a massive flow of money into the yuan because it is fast and it is stable. China is also helping other countries build their own digital currencies, so they can all link up and ignore the dollar system entirely. It is like they are building a new internet for money that the USA cannot control. Then you have the rise of the minilateral deals. Instead of trying to change the whole world at once, countries are making small deals with their neighbors. For example, the countries in Southeast Asia have agreed to use their own local currencies for all trade between them. This means a guy in Thailand can buy electronics from Vietnam using Thai baht. They do not need to convert their money into dollars first. This saves them billions of dollars in fees every year. It also keeps their economy stable because they are not at the mercy of the US Federal Reserve. They are building a protective bubble around their region, and it is working. The dollar is being pushed out of these local markets day by day. Second question for the crew. If you had the choice to get paid in a digital currency that was instant and free, or a traditional bank account that took days and cost fees, which one would you pick? Drop your thoughts below, because the future of your wallet depends on this choice. But it is not just about the tech, it is about the math. Most of these countries have massive piles of US debt, which are called treasuries, but in early 2026, they are starting to sell them off. They are taking that money and buying gold instead. They realize that gold is the only thing that nobody can print or freeze. By selling US debt, they are making it harder for the USA to borrow money. This is a quiet but deadly move. It is like everyone at the party decided to stop lending the host money to buy more drinks. Eventually, the party has to end. The shift to local currency is the first step in a much bigger plan to reset the global financial balance. The USA is trying to fight back by making the dollar even more digital and faster. They are testing their own digital dollar, but it might be too little too late. The trust has already been broken. Once a country realizes they can survive without the dollar, they never go back. It is like learning to ride a bike without training wheels. You feel free and you realize you never really needed them in the first place. The world is moving toward a system where every country has its own voice and no single currency can rule them all. So what does this mean for you and the money in your pocket? As we sit here in February 2026, the bill for this global rebellion is finally coming due. When the rest of the world stops wanting dollars, the value of the dollar starts to slide. We have already seen the US dollar index touch a 4-year low this year. This is not just a bunch of numbers on a screen. It means that everything the USA imports, from the oil that runs the trucks to the fruit in your grocery store, starts costing more. This is why inflation is staying sticky even when the experts said it would go away. The dollar is losing its superpower, and that means the cost of living is going up for every American. The USA is not just watching this happen from the sidelines. In early 2026, we have seen the government threaten massive tariffs on any country that tries to walk away from the greenback. It is a high-stakes game of chicken. The USA is saying if you do not use our money, you cannot sell your stuff in our stores. But many countries are calling that bluff. They are betting that their new alliances with places like China and India are strong enough to survive without the American market. It is a massive gamble that is splitting the world into different trading blocks. You are either with the dollar or you are with the local currency crew. There is not much room left in the middle. But here is the real kicker. Even with all the pressure, the trend of using local money is actually accelerating. This shift is the biggest story of our generation. It is about more than just currency. It is about a world that is finally standing up and saying, we want to be independent. Whether it is through high-tech digital coins or old-school gold, the goal is the same. Countries want to make sure that no single nation can ever turn off their economy again. It is a wild ride, and the map of global finance is being redrawn every single day. The dollar might not be dead, but the age of it being the only choice is definitely over. If you want to stay ahead of these massive changes and understand how they are hitting your wallet, then make sure you hit that like button. It really helps the channel grow and lets us keep bringing you these deep dives. We are living through a total reset of the global system, and we are here to break it all down for you every step of the way. For more mind-blowing stories on geopolitics and the future of money, subscribe Geo Unseen YouTube channel. We have a lot more crazy stuff coming your way, so stay tuned. Thanks for hanging out with us today and for being part of the Geo Unseen crew. Catch you in the next one. Peace from Geo Unseen.